All right, I want to welcome you tonight to my Hurley Investments Financial Services Commentary. Today is Tuesday the 24th, and since it's a short crowd, I'm going to go through this relatively quickly, and I will spend the time with you today just going through questions you guys have. Very interesting. Two key points happened today. Number one, the earnings season started with Alcoa, which missed pretty good. And more importantly, Trump's executive order sent the S&P 500 to an all-time high. If I was to ask you a little bit about the stock market, in general, what can you tell me about the stock market? So in general, what can you tell me about the stock market? It's bullish. I'll agree with that one. What else? General characteristics of the stock market. All righty. It's bullish. Very tight range. I'm going to go through that a little bit later. Inflation should come in the future. Low volatility. So higher volatility should come. Some general things I could say overvalued on a valuation metric. I could tell you that typically the market is forward thinking, meaning it's going to price in today what can happen 6 months down the road. One more thing about the market. Overdue for a correction. In fact, we're overdue for a 10% correction or more. We're about 4.5 years overdue. Abraham, great comment. Many events to happen this year, unpredictable. And I'm going to say many events and tweets to happen this year, which will lead to very unpredictable. So here's a short answer with this comment. And Abraham, I'm glad you said it. With this comment, there are once again no market experts. Why? Every single model to predict the economy, presidency, and I'll just put ETC there, isn't ready or set up for Trump. Deregulation. The stimulus. I can go through quite a few different things. But again, being in the new normal, ruins the typical or atypical models of investing, which is hopefully why you've learned what you've learned, or you believe in the collar trade. Uh, Abraham's making a couple quick comments. Trump, Brexit, Italy, Russia, Syria, Yellen. Uh, yes, I can put all that in here. But it's difficult for a long-term vision. In fact, I'm not going to say difficult, it's unpredictable. Your long-term vision or understanding can't be modeled right now, which is horrible because, out of curiosity, how many people do you think are buying financial plans right now? A financial plan, in all honesty, never worked. It's based on averages. It's not based on, I guess, real day events. If I was to tell you, well, let me ask this question. Are averages your friend? Are averages your friend? No. Averages are not your friend. One more time. Are not your friend. Can't spell worth beans. If you had a dollar that gains, let's do it differently. If we have a dollar that gains 60% and then loses 50%, you have a dollar that went up from $1 to $1.60 and then went from $1.60 down to 80 cents. You averaged over those 2 years a 10% or a 5% yearly average. Most people look at that and say, hey, 5% yearly average. My account went from $1 to $1.05, $1.05 to $1.10 point, what, 0.05? 51, actually. But in real life, your dollar went from $1 down to 80 cents. Averages are not your friend. I am shocked at people that accept and pay for financial planning. All they do is add up a bunch of averages that don't have anything to do with the growth and charge people $2,500 on something that they know doesn't have a chance in hell of being right or helping them. It's going to let them know that they're not on track to literally get the returns that they're looking for. But that's the way it works. I'm shocked at what people look at for averages. You got to have something that's going to protect you. With that said, I'm going to go ahead and squeeze on down here because Abraham mentioned it earlier. The S&P is on course to do something it hasn't done in 52 years. And right now, the S&P is trading in a mere 1.6% range for the month of January through Monday's open. If the month were to end now, that would make January the month with the narrowest range since 1965, according to Oppenheimer. And so the short answer is, what is, with this information, we could go into it a little bit more, but I will have it in the notes. With this information, What does this tell you when you see things getting in a narrow or a more narrow range? I'm going to go ahead and I'm going to kind of give a simple example if I can. A breakout is imminent. There you go. Every time you see it, it basically makes a pendant, right? When the range gets narrower and narrower and narrower, or your Bollinger Bands pinch and pinch and pinch, you're going to see a breakout. Now, Maud is correct. You don't just know a direction up or down. The breakout could be the upside, it could be the downside. It could be 5%, it could be 25%. We don't know. So in the process of not knowing, you protect yourself. You don't guess. You just plain and simply protect yourself. With that said, if I was to ask you what's happening right now this week, what could you tell me? What could you tell me right now if I asked you, all right, what's happening this week? Start earnings season? Anything else? Earnings and Trump. There you go. First week of a Trump presidency. And with that comes executive orders. Hype and hope. Ooh, Maud says start worrying about the Fed. Any idea when we have to worry about the Fed, Maud? Interest rates going up? Well, definitely interest rates are going up. They said they were going to, but they said that last year and it didn't happen. Next Wednesday, February 1st, FOMC rate meeting. Out of curiosity, what do you think is going to happen next week? What do you think is going to happen next week for the Fed meeting? Maud says probably nothing. Why probably nothing? But Maud, they were all talk no action last year. Abraham, but now it's more clear in my mind that Trump measures will push inflation up faster than the Fed's originally expecting, so rates might go up the same way. Okay? My expectation would be that there's probably nothing going to happen the first week because of all the uncertainty. You typically don't throw a rate hike, especially with how dovish Grandma Yellen has been. You don't throw a rate hike into the market with the uncertainty of the winner of the presidential election. Now, if it had been Clinton, you might have seen a rate hike because you know what to expect with her. You don't know what to expect with Trump, in which case you don't see that rate hike expectation. Maud, a couple more comments from Maud. Market at new highs, probably could sustain a rate. Life is always uncertain, which is very true. The market, the economy probably would need a rate hike or two. But the federal government, maybe not so much. An interest rate hike for us of what, quarter point or a half a point equals Oh, for every half a point, it's like 500 billion more dollars of interest we we would pay towards the future. It's rough. But don't they just print more money? Yeah, I wish if they could flood the market. In fact, there's something that we didn't say. Mine just says, can't we just print new money? I'm going to make one other comment on something we haven't figured out. What happened with the stronger dollar? Every time we saw a stronger dollar, what did that equal for the day in the market? What happened every time there's a stronger dollar in the market? It kept going higher. What did our market do? Can you remember? Costs go up. What did our market do though? Stayed in a range. What part of the range, Maud? The high end or the low end? Every time we saw a stronger dollar for the market, it went down. It went down pretty good. We lose 100 points on a stronger dollar. You know what? Stronger dollar, goods aren't selling well internationally. Stronger dollar, it's costing more money to buy commodities. Stronger dollar, stronger that. So our dollar is back at the 100 level for, boy, and I'm not even sure for the index, right? And our markets head up. Exports get more difficult to make, cost more overseas. As I was taking a look the last couple days, I kind of sat here and went, boy, there's not anything that's going on. In fact, so far this week, the only thing that has come in was existing home sales was 5.49 million versus an estimated 5.55 million. Came in worse than expected. Yesterday, Halliburton, McDonald's, Yahoo, and Zions. Other than McDonald's, not much moves. Yahoo went down. Zions Bank went down on great earnings. I don't know what happened with Halliburton, to be honest with you. This morning, we had a couple, earnings before the market. D.H. Horton and Verizon. D.H. Horton knocked it out of the park. Verizon, not so much. In fact, Verizon looked really bad, comparatively speaking. Maybe Sprint is taking all of Verizon's subscribers. Alibaba, beginning of the morning, did very good, which was interesting because we're still talking about bringing everything home. Very shocking that Alibaba would go up as much as it did. I believe it was $3 and a couple cents. Because early in the morning, Trump paraded around General Motors, Fiat, Ford, and I think that's it, right? General Motors, Ford, Fiat. There might have been one other person that Trump paraded around about bringing that work back home, about the 2.25 million cars that were imported last year, according to CNBC, are going to get hit with a ridiculous tariff. Makes me worry. Makes me worry is what I see. So, any idea? Where do you think our market's going to end this week? By the way, the earnings isn't all that impressive so far. I think they said 73 met or beat out of what, 90 or so, met or beat the top line, and only 53 hit the bottom line. So it's not a really good earnings at the moment. Where our markets end this week, we get a probably higher. I'm going to say probably lower because we haven't broken the 20,000 Dow or the 2300 S&P. In fact, if we look at a chart, here we go up again. Could this be the time that it breaks the 20,000 mark? Intraday, it hit 19,999.63. We've only tried once, twice, 3 times, 4 times, 5 times, 6 times, going on 7. Maybe we have, I don't know, maybe we have all the orders that are stacked up there taken care of. I mean, we're bullish, but 20,000 is a definite resistance level right now. The graphs are not published last week. I will go back and I will look at that for you. They were probably not. In fact, Abraham, I will put them on in for you. Mod, I think it does. Sucks everyone in and then kaboom, goes down. Really could be the way to look at it. Pretty interesting right now. Still technically bullish with one indicator that is bearish. But we never got our crossovers. And again, consolidation. It really looks like, I don't know. Short answer is I don't know. So we do have higher highs and higher lows, but it's obviously a pretty flat pattern. We did hit an all-time high today, which is funny because that all-time high, you know, is 20 points from where we started, not even a full percent. Maybe that's not true. 2250, 30 points higher. So 1.5% maybe. And then we look at the NASDAQ. Bullish and also hit an all-time high today. And other than the NASDAQ, you know, there's a chart you want to see. A stair pattern. Up and a pullback, up and a pullback, up and a pullback. Interesting. Take a look at those pullbacks. Those pullbacks happen about every month. Mod says NASDAQ looks like it's broken out. Definitely in the last 2 weeks in that sideways moving pattern, it has broken out. Probably for the most part touching the top trend line if you drew it from November going forward. World S&P end in January. I'm going to turn my expectation around, and I'm going to say a positive 1%. Earnings for the week, quite a few earnings. I put mine in there. Most of the ones that matter for me are more towards the end, but There's earnings for our week. Nice day for me today with Alibaba and D.H. Horton on a couple of accounts. In fact, for a trade, D.H. Horton with like a 28.31 or even a 28.5, 31.5. You can even go down to a 27.5 to 31.5. Bull put opportunity and to pick up more shares. So a couple of you might see some bull puts put into some accounts on D.H. Horton. Google will move the market on Thursday. Microsoft also reports on Thursday. That can affect Friday's trading, pending if one of those is after hours. Intel also reports on Thursday, doesn't quite move the market anymore. FCX, which is what, Freeport-McMoRan, looks like it's breaking out. Will be interesting to see that one on Wednesday if commodities will add to the rally. For economic reports, Thursday we have the Advanced International Trade. I've not really seen that one. I'm starting to follow it, but really, GDP and durable orders for Friday. GDP is only expected to be at 2.2, nothing to really brag about. Durable orders at 3.0, and durable ex-transportation or without transportation is only 0.5. Nothing really spectacular there, but it has, if I remember right, better than expected durable orders than in the past. So we've done pretty well on durable goods, or durable orders as they now call it. Internationally, not much is going on. France, Germany, PMI composite, flash numbers. France has a business climate. Japan has their CPI and retail sales. Quiet week internationally. So really earnings will run through this week and most likely into next week until we hit our average work week next Friday. Lot of economic reports come out next week. Not so many this week, but a lot next week. Basically looking to trade, again, I'm collared or protective putted through earnings. And for stocks that go up, I will add some aggressive short puts, because I think we'd rather take some profits if we have to this year with lower taxes. But yes, I'm going to try to be aggressive on my short puts, doing nothing more than following the trend in our stock market, which is sideways, but it's sideways to up. I had a couple very interesting articles that I saw just yesterday or today. 5 tragic reasons why Marissa Mayer failed, and this is more about leadership. If you like leadership or you like some of these feel-good type articles, I'm going to learn from Marissa Mayer. And of course, this is just someone's opinion. This was published January 12th, 2017. In Business Strategies, Leadership, and Management. Learning from mistakes is the best education if you can afford the tuition. Some of the things that she lacked was experience. Just because she was a brilliant person at Google didn't qualify her for the experience of running a company. Compatibility, again, Google and Yahoo, 2 separate companies, 2 separate things. They said humility, and it might be humility. I don't know her personally. But I do think that you have to come in, well, a good leader is one that gets their arms dirty, right? Rolls up their sleeves, get their arms dirty. And humility / leadership, that's kind of combined here. I don't want to say that she was arrogant, but she definitely thought she had it figured out. Last but not least, strategy. Her strategy was so common and so broad-based that it didn't narrow it down to truly grow Yahoo the way it needed to be. With that said, 8 research-backed strategy every manager should discover, and I think this related to trading, so I brought it back in. As a manager, continue to engage with the work. When you trade, don't just give up because you have a bad week, day, or month. Keep at it. Provide specific feedback. When you're trading, go ahead and give yourself the feedback. Research what you do. Calculate it. Micromanage yourself. Be the example. Not a lot of people are collar traders. It's a waste of money. I can't ever make money. It's not important to protect. We've been in a massive bull run. Again, averages are not your friends. Our market could literally lose 65%. The growth that we have experienced has not come from corporate earnings or profits. It's come from stimulus. We could have our massive reset or a world reset and see our market go down by 65%, and it'll be a heck of a lot quicker than it was in 2008. Be a scrum master, huh? The short answer is what they're trying to say here is that don't put yourself, they call it red tape, don't create so many things that have to happen just perfectly for you to be willing to put a trade in. Be a coach. I think it always helps out to help out other people. Talk about personal goals. Obviously, and the reason I'm going through all these is to hold myself accountable to you guys. Do a great job of defining team roles, or your role for that matter, and you practice positivity. Abraham, to me this is BS. Should not get what market value. Should make a niche first and understand before the customer. I did a meal and did not involve really. Yeah, I mean, the short answer now, these are two separate articles here. But yes, Melissa Meyer missed it. She missed the boat. I just happened to put these 5 things in here because I felt that this article could also help us, that we could learn from someone else's mistakes. And the second article, I thought, I think our second article, in all honesty, is one that helps us directly with being a leader, a manager, or trading. You can take those 8 points and apply them to trading just the same. Well, we don't want to lecture in failure. We want to practice that positivity. I mean, to be honest with you guys, I did grow a portfolio, spread trading and using long directional calls and puts. I was a cheap trader. I was very cheap. I got lucky a couple times, like on an NVIDIA. That was one of my better ones way back when. I got lucky on a Crocs. Directional trade, knocked it out of the park. $2,000 investment that turns into 20 grand. Crocs was ridiculous. You get to a point where you want to protect that money. I went into collar trading, and I knew I wanted to protect it. I just had to work on figuring out the collar trade, and the key was to add more shares to make more money on the run back up. That made a world of difference to me. Made a world of difference in the way that I did things, and it made things work for me. Questions? What would you guys like to go over? I've got all I have for you. So what can I go over with you? Question: by bringing home all the jobs, the reason they left the first place was high labor costs in unions. What then result be more expensive goods? So how does that help the average Joe? What am I not understanding? Okay, Maud, yes and no. Now with bringing jobs back home, that only works in conjunction with deregulation. But here's the short answer. Yes, by bringing jobs home, it's going to cost businesses huge amounts of dollars. For a lot of these industries, it won't kick into effect till way after his first term. But are they going to pass that on to the consumer? Most definitely. So I guess the short answer is this. As I think about it, job creation here in the United States are really small business, mid caps that have some higher potential growth. That is where the job growth occurs in the United States. Some of what he's doing with the auto industry, it looks good, it's token. Hey, we're going to put a new factory, it's going to be, 5,000 jobs. It's really deregulation and taxes that'll make the difference. If we do have lower taxes, we have more jobs that are a little bit better paying. It might offset some of the higher prices, but again, as Abraham said, we will most likely have some inflation that we're going to use or see. Abraham, on the equities you currently trade, do you always get long puts for earnings protection in this season? I do, especially in January. With that said, though, would I occasionally not have a long put in place? Yes. In fact, I just ran Zions Bank with no long puts in place. D.H. Horton, I put my long puts in place a while ago. Visa, that's now up at 83, I'm going to run with 81 long puts in place. I definitely are going to have long puts right now on Disney, on Apple, on Baidu. I might be rolling those down to take a profit and make them at the money. So the short answer is first quarter usually does not have the best earnings. They usually have to give some yearly guidance or reaffirm yearly guidance. It is not the best quarter in our stock market, and I try to trade accordingly. How do you find the Crocs and the NVIDIAs? Maud, a lot of it is dumb luck. So as I was starting to put some of these trades in, I was a cheap trader. I'd go put $500. In fact, I'm going to start an advisory. I'm going to start a cheap trading advisory. There's no reason why we can't go for the fences. In fact, most really true portfolio growth for a small person was allocating their portfolio to cheap trades that had huge upside potential. $500 trades or less, 4 contracts on this, 10 contracts on this. That's where I saw the biggest growth in my portfolio until I had enough money that you could start to buy some of these bigger blue chips that would move, like an Apple, like a Baidu, like a Visa and Disney, for crying out loud, over the last couple of years. Visa went from $75 up to $280 and did a 4-for-1 split. I remember getting in Baidu at $165 and going up to $775 and splitting. Apple, I have people in Apple at 85, went up to $775 and did a 7-for-1 split, right? I guess it was 700 did a 7-for-1 split. There are some things that you do to find fundamentally sound companies, but to be honest, to say there was something I found on Crocs or NVIDIA that all you got to do is look for huge cash flows that show great growth opportunity, it's not there. It was following a company that I believed in, that I did my research, that for years, guys, NVIDIA didn't move. I picked up 300% more shares of stock on NVIDIA till the sucker finally moved. It's a pretty long process, and unfortunately most people don't have that time to earn money. It's in a certain period of time or they're gone. We kind of live in a quick me mentality. It's kind of sad. I had some people that I picked up, October, November, picked up maybe in September. and we ran through not a spectacular end of the year earnings for Ford and for Disney. Great opportunity to add 100 shares to Ford. Great opportunity to see a lower cost basis for Disney. Beginning of the year, those accounts that we were constructing portfolios in, those two took off. I've got portfolios, again, that have the Ford in them. Some of the smaller ones, in all honesty, that look really good. Disney after earnings can look really good. We're going to play catch up in the beginning of this year. Maybe a mistake, maybe not, we don't know. I put in 100 and 300, 290, 390 S&P 500 March long puts in place. It was a protection. When you get up a bit in the market, you throw some extra protection on in there. Well, those have done nothing. You know, a $2,000 investment, a $2,100 investment has lost half its value. But I still have those going all the way out to March. I've got until March to let our market fall down and find some errors, you know, find a little bit of pullback. The market is nothing more than a series of consequences. You either make a trade because you're going to make some money on, or you don't make a trade because you're afraid of it. But all the market is a series of consequences. If you want all the upside risk, if you want all the upside reward, then you probably have to take all the upside risk. Pretty hard for a lot of people to do. I can't do that right now. But the market's bullish. Well, yeah, it's been bullish for 8 years. We are so overdue for a correction. The 8 years of growth, I don't see it. It all relates to stimulus. You haven't had the earnings growth from companies. Our market's built on a house of cards. Our market's at an all-time high valuations right now. We're way overpriced. Ridiculously overpriced. Never been priced so high as we are right now. I don't see the earnings that justify that. I don't understand. To be honest with you, I'm at a complete loss. I don't understand. Doesn't make sense to me. We shouldn't be up as high as we are. Shouldn't be anywhere close. In fact, I feel the risk is to the downside. I don't think the risk is to the upside, not making as much. I think the risk is to the downside. It's just a numbers game. As I work through all my valuation numbers on companies, on the market, ridiculously overvalued. None of it makes sense. Do you see recession this year? Maud, I don't. I probably see it next year. Taxes and regulation can do a lot to ward off a recession. So, it's probably a 2018 type of scenario because we don't grow as quickly as we should, and we don't have stuff implemented as quickly as we can. Only can be done with much less government. That's assuming they happen. Yeah, true, Maud. In fact, if Trump does what he wants to do, he will lay off hundreds of thousands of people in the government. EPA will get whacked. The educational people will get whacked. could be huge. Could be really bad. And that's true. Ma just said every reaction has an opposite reaction. Yeah. For reaction, there's a reaction to it. I don't know. I'm not going to pretend to know. What I am going to do is keep myself in good, real good blue chip companies that have great upside potential. Again, I like Disney. No reason last year that Disney should have lost 25%. Still trading at 107 or 107, 106. It still should be, as I run my valuations on it, and its potential earnings, it should be closer to that 127, 129 range. Oh, they still get all their money from media. Even in skinny bundles, people are going to be getting Disney. My kids watch it all the time. We buy all their stupid movies. I had a couple things that didn't run last year. A Visa, a Disney, Apple didn't run. Baidu didn't run. I had some explaining to do to people last year. Well, you should just get out of it. And I kind of shook my head to a couple people and said, really? You've just taken all that pain and suffered through some things not moving, which means they now have room to grow and run this year, lower comps to beat this year, and you want to dump out of it? That's not smart investing. It's day trading. Got to stick to what you believe in, what you know what works. And I am going to do that. All right, guys, any other questions? All right, hey guys, appreciate you being here. Abraham, thank you for telling me. It's been a while since I've posted those and did not realize I did not have my pictures in there. So I will get those pictures in there. I will edit last week's post and get them in, and I will get this in as well. I appreciate you guys being here tonight. Thank you very much. You can find this stuff on myhurleyinvestment.com. And guys, have a wonderful day. I'll talk to you next week. Bye-bye.